And welcome back. You are watching The Pulse. Good to have your company. Now, we were just talking about earlier in the break there, NAB's March business survey showing both confidence and conditions continuing to rise. So let's get some more analysis of that and how the lenders are responding. Anthony Landahl, Managing Director of Equilibria Finance, joining us now. Great to see you.
Good afternoon. Nice to be here.
Yeah, okay, so it's all looking pretty positive then from business. So how's that been reflected, particularly as far as loans are concerned?
Yeah, NAB had a recent business survey they brought out which had some interesting results. I guess the backdrop of that is that we came off JobKeeper, business sentiment's been down, there was a lot of uncertainty around what would happen with employment, with the economy, but what these results showed was while business sentiment is still down a little bit, it's growing, but what we're actually seeing is business confidence operationally is ahead of where they forecast that would be. So what we're actually seeing operationally is most businesses are now operating in construction, property and finance, mining, those main sectors at sort of 85% capacity these results showed, which means that they're back where they were pre-COVID and they've got orders to grow into, they've got scope to grow their businesses again. I guess the areas still struggling are retail, hospitality a little bit, but across the economy, capital utilisation's back around 80% with room to grow in terms of what these NAB results specifically showed, which is essentially what you started with your introduction, is that business confidence is getting back where it should be before pre-COVID levels.
Okay.
So I guess what does this mean for lending then? Is there a shift into people wanting to borrow more money?
What there is we're seeing a change in what businesses need. They're now looking at capital growth. They're now looking at investing back in their businesses as distinct from cash flow needs or as distinct from essentially being in hibernation and trying to survive. So we're looking at more CapEx requirements and we're looking at more needs around capital expenditure.
Yeah, we've just seen the breakdown there, certainly as far as, because I mean CapEx is essentially stalled, hasn't it? So you're starting to see that now, at least commitments pick up. That's obviously good news.
That's good news. 66% of larger businesses are now looking at employing people in the next 6 months. 33% of small businesses are looking at doing that. But essentially across the board, we're seeing businesses look at capital expenditure. Their finance needs are changing. Their finance needs are shifting from essentially cash flow to survive to looking at cash flow needs and growth needs around how can we grow our businesses again now.
What does that tell you? The fact that businesses are now willing to commit to spending, they feel as though we're well and truly past the worst of this. The economy's reopening. It's all looking pretty rosy.
It is. There's a bit of a split dynamic there. Some of the areas are still a little bit confidence is down, retail, hospitality, but across mining, construction, property, finance, you're right, there's a lot of businesses now looking at that investment play, looking at that strategy. And that's what we're seeing reflected in operationally in those results was operational capacity is back over 80%, which is great for confidence. And we should see that now reflect in business confidence in the months ahead.
Any particular regions or sectors that you're seeing the biggest growth? I think the last time we were speaking, we were talking the strength of some of those sub-regional centres.
Yeah.
Obviously, you've had a lot of people moving population-wise to those centres, and that's therefore supporting businesses. Where are you seeing most of their growth at the moment?
It's a little bit. It's a little bit more around the sectors. You might have a regional centre or you might have an area that's got certain industries that are going really well and you've still got some industries that are struggling. Some of those consumer-facing industries, they've still been struggling a little bit, but a lot of those larger businesses have been, they're probably the ones that are surging the most, where they got that government support, where they had a bigger buffer to be able to survive that COVID period. Smaller businesses are taking a little bit longer, but again, it's been around the mining, the property, the finance, those sort of areas that have really rebounded. And some of those more consumer-facing or the hospitality and the retail have, I guess they're lagging behind and their confidence is still growing.
And are the lenders coming to the party for those businesses that do want to borrow?
That's always a challenge. We're finding access to credit is still challenging for some businesses. The providers have to shift their mindset as well around how they're analysing a business, how they're looking at businesses, not only what's happened in the rearview mirror, but what those business plans are, the history and the character of the directors of the business who've survived these events in their business cycle in the past. So access to credit has still been challenging for a lot of businesses, whereas there's a lot of businesses that should be able to access the credit now to look at their growth plans, look at their capital expenditure investment, and the lenders need to back the businesses like we need the governments to, we need people, the consumers, small businesses and the lenders to back the businesses as we keep rebounding out of this, which is what's happening.
Anthony, thanks for joining us from Equilibria Finance.
No worries at all.